Alright guys, what's going on? This is Ryan, aka Canteringclark, and I want to do this brief video for our YouTube channel members. Alright, I want to go over this post that I put up yesterday on Twitter. Okay, essentially we talked about this setup on the Blockroots platform on Sunday, covered it again on Monday in a following video, and I mentioned that while price was at 9,700, that we had this sign of blatant absorption. Okay, I referenced the price action and the CVD. Okay, and this all occurred at a majorly significant area within market structure. All right, so first and foremost, you have to have an area of interest. So we have to have an area, either support and resistance, a clear horizontal supply and demand zone, something that we can in advance look to identify whether or not there is significant participation. So what we saw on this chart was a very clear sign of absorption. All right, so we talk about this on Blockroots. We talk about the CVD, which is the cumulative volume delta. All right, and just a little bit of a refresher, delta is the difference between aggressive buyers and aggressive sellers. So in each individual candle, there will be a delta. So if we're looking at just this large black candle right here, you can imagine that there were probably far more excess sellers than there were buyers. Okay, so the delta was probably very negative. All right, so negative delta meaning there were more traders hitting the bid, aggressively market selling. Okay, the opposite can be said more often than not for green candles, right? You have more buyers than you do have sellers, but it's not always in every case that you actually have a positive delta for a green candle or a negative delta for a red candle. Okay, sometimes there are clear rotational differences where you might not have excess buyers in a green candle. Okay, you maybe will have certain liquidity dynamics or shifts in the order book that involve price moving up, but there actually being an excess amount of sellers. Okay, aggressive sellers compared to aggressive buyers. All right, so each individual candle has a delta. Okay, the cumulative volume delta is the running total of that over a period. So that negative and positive number being added over a period gives us that cumulative volume delta. So the cumulative volume delta in this case showed us clear signs of absorption. All right, what we're looking at is price made a low and then actually made a higher low, but the cumulative volume delta, okay, made a lower low. All right, so what you have to imagine is, to put it very simply, between this point and this point, all right, from going from this low to this low, we actually had an increase in overall negative delta. So we had an increase in aggressive selling across this range. So just imagine it that way. All right, so much so that there was an excess amount of sellers at this higher low than at this lower low. So for increased selling pressure, we actually didn't make even an equal low. We made a higher low. All right, so what this should tell you is that at this level, for the increase in selling that we saw, it actually had less of an effect on price. All right, so that's the type of thing that we teach in Blockroots. That's what we teach with delta divergences. We'll even talk about individual candles. So just to give you an example, let's say we have a candle like this, and let's say this is our significant level. So candle like this, and then a candle like this. All right, so price is traveling in this direction, okay, comes into a level. And let's say that this candle has, let's just say it has -5 delta. So there's more aggressive sellers in this than there are buyers. All right, and let's say for example, actually rather, that these are all equal highs. So make this a little bit easier. Okay, so it's to not cause any confusion. So coming into this level, again, maybe even lower. Okay, so actually lower, and then now this one is actually higher. Okay, so again, we're traveling in this direction. So let's say that this is a -5 delta, so more aggressive sellers than there were buyers, and then this one is a -10 delta. Okay, so let's see if I get that 10 in there. So we have -5, -10. The increase in sellers moved the price lower. All right, now let's say with this candle, we actually have a -15 delta. So we actually have more aggressive sellers in this candle than, well, even amount than both of these combined, but more aggressive sellers than the prior candle, okay, more aggressive sellers than that candle before it, and let's say actually it was -18 million. So -18 in this case, let's say it's -18, let's just keep it at two-digit numbers. So -18 delta. All right, so we actually have more aggressive sellers than the total two candles combined, but what do you notice? For more aggressive selling, price actually reclaimed a level. Okay, it actually made, in this case, a higher low than the previous candle and an equal low to the one prior to that. So for the increase in selling, we saw less movement downward. And normally when you sell, what should price do? It should go down unless someone is here capturing all that. All right, so the passive order is the one that's on the other side of that active order. So when you use a market order on Binance or on Bybit or on Coinbase, your market order goes into someone else's passive order. All right, and the larger players typically use passive orders because it costs less. All right, they get a rebate, and they'll be putting on a position over a larger span of time. All right, or over a further distance. So this is exactly what we saw down here. All right, and we talked about this. We set this pattern up on Blockroots platform. Okay, so if we go to the Blockroots platform on Monday's video, we uploaded the Trader Checklist Part 2. We set this exact pattern up. All right. And we want to see that open interest, when we have a divergence, say for example we have a divergence, we have a major divergence, let's say we put in that pattern, so let's say we do something like this. Now this is right at the level. Here's price action, and you know, I can't fit it right here, but let's say the CVD does something like this. All right, whoops, so here's price action, okay, and here's the CVD going down, continuing to go down. Right? And we see that open interest is doing this. Okay, what that means is that this is new business. So this aggressive selling is new business, meaning it's not old business closing out, meaning it's not longs closing out, that it is actually shorts opening up, okay, through a level. And that gives us an indication that maybe one side is offsides. And how do we tell whether or not they've lost control? So we got into the concept of traders being offsides. All right, so that's the term trap traders or traders offsides or caught on the wrong side of the market. All right, and this often happens to traders that are trying to force breakouts or force breakdowns. So it actually looks like we have a case of that over here where we had a high put in and you have traders that are looking to buy a breakout of the high. And what happens, they get trapped up here, okay? You have lows being put in and you have this big low put in over here. And so when people see that, say for example, here's a clear high between this structure, when people see that we're losing that, all right, right here, their anticipation is that there's further downside. So what you see is there's an increase in selling through that level. All right. So an increase in selling through that level in anticipation that this is going to further break down. All right. At least past this level. So what happens is shorts try to force a breakdown. All right. They try to add to a position that looks like it has momentum in anticipation of it having carry through or follow through. The same thing with longs. All right. They buy very late in the move. All right, so ideally if you want to be short, you should have been short from further up here, but instead they're entering in late, okay, because they want more confirmation. All right, same with longs that are buying breakouts, okay. They should get positioned almost counter trend when price is moving down. They should be buying in a passive way, but instead they're trying to actively buy on a breakout of the high, and they often get trapped. All right, so we're going to be looking for key levels first to identify where this participation exists. So on Sunday we talked about this. All right, we talked about this in our Sunday outlook. And we pointed out these two exact levels right here, okay? We want to see price comes into a previously contested area and that it serves to reject any progress. All right, so in this case, we had two examples right here and right here of trap traders that we saw in the footprint. So what you'll see is there'll be a previous level, okay? Price will, for example, come into the level, all right, come up, and then come back through the level. And when we come back through and violate the level, there'll be an increase in overall volume. All right, so relative volume compared to the previous volume, and also relative volume in terms of the footprint. Okay, so we'll see that price, when it passes through a level, because you have those traders that are looking to participate on a breakdown, all right, in this case a breakout to the downside, right? Breakdown, breakout to the downside. Okay, in this case, they're looking only to get involved then, so you see a substantial increase in volume or participation through that level. All right, so if we looked at a footprint, for example, okay, if you have on Exo charts or Sierra, you see this exact thing happen, right? So here's an example right here. You get this sort of shape where it looks like a B because there's really no volume at the top of it. There's only volume that comes in when it breaks a level. Okay, so you see how towards the bottom there's a substantial increase in selling volume. And I'll actually see if we could scroll and see here's a prime example right here as well. So here's a really good example. You have this aggressive selling in the lower portion of the candle. All right, you can see this is where the wick begins, but you have all this aggressive selling down here. So this is what we look for at a level. We look for these aggressive sellers to commit into the lows. Here's another perfect example. This is prime. So you have a low right here. You have selling into this level, and then you have a really substantial increase down here. Okay, so the distribution, most of this volume is aggressive selling, okay, as highlighted here, as highlighted here. All right, so a ton of aggressive selling below the level. All right, so what happens? You break through a level. All right, their anticipation is that you break through a level. There's that substantial increase in volume. What happens is, as we trade sideways for a period of time, okay, and this is not this exact example because this was a clear delta divergence, which was, if anything, way more actionable. But with trap traders, just staying on that term, what happens is you have a level, a bounce, you come through the level, you have a ton of volume below this, and then you trade back above the level, and you'll see a shift in participation. All right, you'll see that there's a ton of red going into the level, and then because price fails to break down, you'll see aggressive buyers start to try to bid this up. All right, and what happens is you see a very clear shift in participation on the footprint chart. So if we go back to the footprint chart now, you'll see that immediately what happens when we trade back above this level. So here's your level of fat volume. All right, so if we just designate this again, here's your low. Okay, here's your lows rather of both of these structures. We'll just go off of this. Okay, there's your lows, right? Here's your fat participation below the low in anticipation of a breakdown. Okay, price fails to break that, and when looking at the footprint, you see this happen right away. So what do you see immediately? See all of that blue, which is, in my case, it's actually green. In your case, it might be green, but this is a ton of aggressive buying coming in. So what happens? Price trades back above a level. Okay, so price breaks through a level, aggressively sold, and then trades back above. And now these traders are trapped. Okay, and now those traders are caught off sides because there's a smaller players that anticipated a breakdown, and what happens? The market presses upward and uses everyone who aggressively sold this area of the market, all right, to further the move upward. Okay, so when you identify that there's fat participation caught off sides, all right, and you have that distribution, that's an awesome opportunity to take a counter trend trade. And by counter trend, what I mean is the trend in that case for the near term might have been up, but what we're looking to do right now is take some type of mean reversion or counter trend trade, anticipating squeezing that side of the market. So hopefully this is useful, guys. All right, it is something that we focus heavily on Blockroots. You know, we have a ton of content on Blockroots. We have over 150 videos by now. The order flow and market profile series is absolutely awesome. Okay. This is a phenomenal course for anyone who's looking to learn order flow. I would say that hands down it's the best course out there right now. I'd say that we offer the best platform, and bar none really. I don't think that there's anything out there that really compares. We get tremendous feedback from all of our members currently. So if you guys have any questions, absolutely feel free to reach out and ask. Looking at this right now, it looks like we could potentially have this similar setup occurring over here, where what happened, we traded through a significant level. Okay, this is at the week of February 10th point of control. Okay, previous structure, we reclaimed this low, and we did have some trap traders down here, but it looks like we had a lot of participation up here, and now all the market needs to do is trade below this structure, and you'll likely see that, if anything, maybe we'll get a test back down to these lows. Okay, nothing massive yet, but the idea is still the same. Here's your key area, trade through this level, and if we look at this, we'll probably see a decent amount of participation as well towards that high. So going up here, let's look at the high, and that's not the high yet. Let's get all the way to the high. Here we go. So here's your high. This is above 10,255, just to confirm where that is. So 10,255. So from here, okay, up, we're looking at this amount of volume coming into the market. So from 10,055, from here, all right, aggressive buying all on the right side. So 1 million, 3 million, 3 million, 3 million, 3 million, 4 million. All right, you're looking at a ton of buying volume coming in above that high. And what happens now? The market's trading back below it. So all of these positions are now trapped in position. Okay, and we go over how to look at open interest and confirm that these are new business and not old business closing out. And I think that does it, guys. We're back to the video platform page. Have a great evening, guys. If you have any questions, feel free to reach out.